Okay, good afternoon, everyone, and welcome to this new virtual dialogue on green bonds. My name is Basile. I work at the EADI Secretariat in Bonn. We are the European Association of Development Research and Training Institutes, and we work in improving the visibility of development studies throughout Europe and promoting cooperation between members across countries. You can check for other virtual dialogues and events on our website at eadi.org. Today, we are delighted to welcome Dr. Tomaso Ferrando from the University of Antwerp for a talk on indebting the green transition with critical notes on the expansion of green bonds in the South. Tomaso is research professor at the Faculty of Law and Institute of Development Policy at the University of Antwerp in Belgium. He holds a PhD in private international law from Sciences Po and has been previously affiliated with the Faculty of Law at Bristol, Warwick, Harvard, Sao Paulo, Cape Town, and Turin. His two main research interests are the financialisation of the green transition and the role of law in the creation of a just and equitable food system. He's also currently serving as senior advisor for the UN Special Rapporteur on the right to food. In terms of the structure of this talk, the presentation will last for about 25 minutes and will be followed by around half an hour of a Q&A. We kindly ask you to keep your questions for the end and not interrupt the speaker. And when we open the Q&A session, you can write down your questions in the chat or send them privately to me, and I can then ask them to the speaker and compile them into a list. Now, the floor is yours, Tomaso. So welcome, and thanks again for accepting our invitation.
Thanks a lot, Basile, and thank you for joining us and for being here, and thanks for dedicating some of your afternoon to me and to my talk. I know how busy these days are in general, but also for people interested in green transition and green stuff. Definitely the COP and what is going on in Glasgow is attracting a lot of attention and taking a lot of our time. So it's my pleasure to share with you some of the thoughts that are coming out from multiple streams of research that I'm involved with, but I also would say that given the possibility of being not so many people attending today, it would be great to use the second half of this hour together to learn more also about what you're doing, what your interests are, and the way in which you are, or maybe in the future, connecting the issues of financialization and finance and the green transition. And I see, for example, Arinj, who is also at the University of Antwerp, who can definitely, and I would love to invite him afterwards to share his take on the issue, because I know that he's doing a very interesting research on blue bonds. So I'll share my screen for the moment, for the time being. And also definitely thanks a lot, Basile, for the kind introduction and for pointing out a lot of things in a very generous way. So the title has been chosen not because it's long and long titles are cool, but because I was trying to represent in the title the two main topics and the two main points that I think are relevant for the kind of research that I'm conducting. And I wanted to put debt and indebting at the start. And I wanted also the issue of the South, intended as the global South, to be present in the paper, in the presentation and the title, to really highlight the importance of not adopting a universalist and omnicomprehensive approach when we study finance and the role of financial actors in supporting and finding resources for the green transition. And that's the reason behind the title. Before I enter into the presentation itself, I just want to mention that what I'm going to be talking about is the outcome and of several collaborations that I'm very glad to be part of. And in particular, one stream is that which I'm involved with colleagues mainly from Brazil, a research collective that we called the Green Bonds from the South Collective, with whom we've been publishing work mainly looking at the role of green finance and green bonds in the interactions and relationship between North and South in terms of historical inequalities and present dynamics. Then I'm also involved in a smaller research group of just two people with a colleague of mine, Daniel Tischer from the University of Bristol, from the Economics and Management Department. And we're trying to develop some research on the network of actors behind the green transition and green finance. And I will briefly touch upon that during my presentation. And then there is the third stream, of the third prong of this research endeavor, which is rooted at the Institute of Development Policy at the University of Antwerp, with some elements, including Arinj, also from the broader faculty, for the broader university. And what we are trying to do there is to really gather and convene more and more research around the issue of the relationship between debt and the green transition. So not only focusing on green bonds as one of the instruments of the green transition, but multiple forms of debt and debt instruments that are utilized and increasingly utilized in order to finance what is needed in terms of climate change mitigation and adaptation. So just to say that I'm not speaking on behalf of all these groups, but I'm really thankful to all the members of these groups, because it's through the collective work that we've been capable of publishing, and definitely that a lot of the things that I'm going to be discussing today emerged and took some coherent shape. So the main objective today, also because I didn't know how many people will be attending and what is the background of the participants in terms of knowledge and engagement with the relationship between development finance and development finance in particular, is to present a broader overview of the main issues and the main criticalities that have been coming out from these three streams that I just presented, in order hopefully to get the attention and the interest of everyone, and also to invite further reflections in the Q&A, and potentially also future collaborations in case participants and people who will be watching this recording are closer to one of these issues or one of these criticalities that I will be presenting. So from a broader macro spectrum of what we're talking about, I will then try to dive into some of the specificity and some of the main elements and main findings that are coming out from the research that we are conducting with colleagues in Brazil, UK, and here in Belgium. So, as I said before, I think it's a busy week, and definitely the next one is also going to be very busy with the COP for people who are interested in climate change mitigation and adaptation, and that are interested in the green transition in general. But it's also a week that is telling us something that was already somehow lurking in the background in the last year, after the sort of recovery plans were launched in the European Union and in the United States to build back better, or to have a Green New Deal. And what was lurking in the background and now is increasingly visible is the role that debt instruments, and in particular bonds, will be playing in financing the transition, will be playing in finding the resources or funneling the resources towards projects, infrastructures, and investments that are considered to be green and that are considered to be aligned with the agenda for climate change, adaptation, and mitigation. So if that in general is increasingly important, green bonds more specifically are really at the core of the approach that finance is having vis-a-vis the green transition. So they do represent the main instrument, or the principal instruments, when we talk about debt and the green transition. And the progression is pretty much represented in the graph on the top left. We started from issuances of 46 billion in 2015, and we get in 2021 to the so-called milestone of $1 trillion in green bonds. And this was an announcement that was made a few days ago by the Climate Bond Initiatives, and in particular by the director, Sean Kidney. And it's important that we keep in mind this name of Climate Bond Initiatives, because they definitely are one of the main actors that for the last 4 or 5 years has been pushing for the expansion of the market for green bonds. And we will find them also somewhere else. And it's in my presentation, it is also interesting to see the role that they have in terms of creating the narrative and also advertising what is happening. So a couple of days ago, they announced that the $1 trillion may be a goal reachable in 2022, with the perspective of even increasing in 2025, with the possibility to get to $5 trillion of green debt in 2025, and therefore a massive amount of resources that is going to go and financing through green debt, infrastructures, and projects that are related to climate change, adaptation, and mitigation. So if that is what is happening at the sort of broader macro level, it's also important to realize that green bonds are not only a matter of private initiatives like the Climate Bond initiatives and these actors that are operating in the creation of the market, but are increasingly part of the policy and the sort of avenues that governments and multilateral development banks are adopting. And so on the bottom left of the screen, you can see a presentation of the Next Generation EU, which is the sort of Green Deal fund or the fund that will be supporting the implementation of the Green Deal. And you can see that the green bonds play a central role in that. So when we talk about green bonds, we're not only talking about financing the green transition in the global south, the green transition elsewhere, we're also talking about the future of the European Union and the use of that instrument in order to find the resources for our own, from an European perspective, green transition. But at the same time, there is an increasing evidence that green bonds and the use of green debt is expanding in the global south through the intervention of multilateral development bank and national development bank. So I reported here a quote from the Inter-American Development Bank that was released just on a document that was made on a document that was released at the beginning of this year, that shows the interest and also the attitude that the Inter-American Development Bank has vis-a-vis the use of green debt and green bonds as an instrument to find the resources to finance the green transition. But some sort of similar statements could have been identified, and I could have been reporting similar quotes and similar attitudes also from National Development Bank, like the BNDES in Brazil, or actors at the multilateral level, like the IFC, that has been certainly a key actor in the establishment and the construction of the markets for green bonds. So governments, private actors, multilateral development banks, national development banks, and corporations, they are all looking at green bonds as one of the ways, if not one of the most interesting ways, to find the resources in order to finance the green transition. And that could be in itself the story. The whole story could be about the fact that there is a new financial instruments that has been on the market for a few years, and now more and more actors are looking at that as a possibility to get the resources that are needed. But that was not the story that we wanted to tell. It's not the story that we are researching. And that's also just a sort of geographial representation of the way in which a multiplicity of states, both in the north and in the south, are now looking at green bonds as an opportunity for funding. Just to give you a sense that although like it's clearly an European prerogative and there is an increasing presence and participation of European actors, it's expanding also geographically to other countries, and therefore there is the need also for interest from the perspective of development studies and studies of the global south. So, as I said before, what we want to tell is not the story of just another financial instruments. We really want to understand what are the elements behind that financial instruments and what are the implications that derive from the use of these specific financial instruments. And when I say these specific financial instruments, I mean financial instruments that have two components. So the first component is that of greenness. So the green part of the name. As you can see here on the slide, there are just one of the definitions that have been used most frequently. But what makes a green bond green and characterizes vis-a-vis the other bonds that are normally called vanilla bond or plain bonds is the fact that whoever is issuing that bond commits to use that money, that funds that they will receive from the market, in order to fund projects that are considered to have environmental benefits, that are considered to contribute to climate change adaptation and mitigation, that are characterized by the fact of being green. And then we will see what green actually means. So there is a component of extra commitment vis-a-vis a normal bond. So there is actually an element that differentiates the green bonds from any other bond that has been issued before, at least in terms of the legal construction, because at the end of the day, we're talking about a contract between an issuer and a buyer that is then the creditor. But then there is also the second element, and it's interesting to notice how a lot of attention has gone on the first element, so on the greenness and the construction of green, and I will say something about that in a few seconds. But much less attention has been gone to the second element of the name, so the bond. And the bond meaning the contract, the agreement between a debtor and a creditor. So the bond in itself is a legal artifact or as a legal element or a legal instrument, but also the bond as the long-term relationship, legal relationship that is created between a party that owes money and a party that is owed money. So there is a credit vis-a-vis the other party. So in our analysis, we wanted to focus as much on the green as on the bond, because we think that there is something to be said about the implication of using debt and debt instruments when we think about development, when we think about the relationship between states, between private actors, between subnational authorities and creditors. So that was just a sort of quick introduction on what a green bond is, but definitely we can talk about that more in details through the next slides and in the Q&A. So as I said before, what we wanted to do was not just to look at the fact that there is an expansion in the market and the opportunities behind it. And so with all the research groups that I'm involved with, we try to move beyond what is the current state of the art, and we try to move beyond what is the mainstream approach that academics have been having vis-a-vis green bonds. And here in this slide, I've been resuming and condensing a little bit the two mainstreams that you will be finding more frequently if you were to look at Google Scholar, or if you were to do a research on green bonds and academic literature. So on the one hand, you have the sort of mainstream business and management approach to green bonds. And what these writers, these academics and organizations are interested in mostly is the functioning of the market and the financial rationale behind the green bonds. And what they talk about is the issue of greenium. And for greenium, what they mean is whether or not there is a premium for the issuance of green debt vis-a-vis plain debt or vanilla bond. So they're interested in studying through analysis of markets, market tendencies, primary and secondary market, whether or not there is a reward or an extra reward for those actors that are engaged and invested in the green markets and in the markets for green bond, with the aim and the objective, I would say, to demonstrate that there is actually a financial incentive and a financial reason to issue this kind of bonds and to engage in a process of certification and a process of identification of the bond as green. So the two main questions that academic literature asks when dealing with the greenium is whether it is cheaper for issuer to issue a green bond vis-a-vis a vanilla bond. That means, are they going to be receiving more money because the market is particularly interested in green products, and therefore because there is high demand, the cost of issuing that would be lower and the reward would be higher, or whether it is more appealing for buyers to buy those bonds because actually they can generate more money out of the interest that they would receive when they become creditors. And so these are the two main questions, and definitely they are interesting, and there is plenty of work around that. Just to give you a sort of a spoiler, all in all, there is not yet a clear understanding whether or not there is a greenium connected with the issuance of green bonds, and there is not yet a final answer to the fact of whether or not the issuers are particularly rewarded when they issue a green bond or where they label a bond as green. But the other point that is increasingly of attention and interest for the literature, for academic literature, is that of greenwashing, which probably you're familiar with. You know what the notion is about. It's this idea of calling something as green, which at the end of the day is not as good for the planet, for the environment, for climate change mitigation and adaptation as it pretends to be, or as it is needed. And so greenwashing is increasingly, with the expansion also of the amount of academics that are looking at the issue, is increasingly discussed and debated in academic literature. And you will definitely find more and more scholars that are engaging with problems connected with labeling a bond as green that eventually is not so green. And you will see also policymakers that are taking that issue increasingly seriously. And the idea is that there are problems and concerns if we start putting on the market green products that at the end of the day are not green. And this problem is not only going to be for the planet, for the environment, but the problem is also going to be for the market itself. If you are pushing for the construction of a market because you think that through that market you can find the resources that you need in order to finance projects all over the world and to actually finance the green transition, and it turns out that these projects are not as good as you imagine, you lose legitimacy, and probably in the future this market will just fall apart and be completely marginalized. So there is an internal interest also of the actors behind the green bonds framework to push for or to push against greenwashing and to push for clarity on what is green. And so here I just listed 4 of the main responses that are provided when the issue of greenwashing is discussed. We can enter into details later, but in particular, the last one is useful because it's one of the criticalities that we have been analyzing. So how do academics and how do policymakers and the actors of the market respond to the idea of greenwashing? The first answer is, well, we are only going to call green what is labeled as green. Because till today, if I want to issue a green bond and call it green, I don't have to certify it as green. I don't have to have any approval or any recognition, any formal recognition of the fact that it is green. I can call it green as long as someone buys that bond as green. It is going to be green. It's going to be green between the 2 parties, but that's at the end of the day what a contract is an agreement between the 2 parties. If we go for certification and labeling, what happens is that you witness, and it is already happening, a multiplication of standards. So if we say we only recognize as green what is certified, everyone wants to be certifying and everyone wants to issue a certification structure because everyone wants to be the organization that is certifying. So against the multiplication of standards, one of the answers that is provided, and this is becoming very, very popular, is the idea that we should be, or that policymakers and governments, and I think that will come up also in Glasgow in the coming days, we should be universalizing specific standards and taxonomies so that there is not a multiplication and a diversity, there is no overlaps, there is no confusion, there is just one term of reference, and that term of reference is the one that everyone should be applying. Of course, if we move from a situation of multiple standards into one standard or very few standards, what we witness is a competition for adoption. So everyone would like to become the standard that is applied. And that can come with some consequences that we can discuss in the Q&A if you want. Another element or another proposal is that of having third parties, some sort of credit rating agencies that are not providing the standards, but are implementing, that are checking on the implementation of the standards, but there are already enough studies that show that there is a risk of conflict of interest in the moment that third-party organizations receive money out of this, the accounting and out of the check that they realized. And so the 4th element, which I think is interesting because really connects also with the sort of local and global nature of green bonds and development finance or green finance. The 4 elements that has been proposed is that of moving towards public standards and public taxonomies. So there has been this call towards more participation and a stronger role of the state and a sort of lower role and a limited space for self-certification and the private sector, which I think overall is something that we are witnessing and seeing in many conversations and discussions around development finance. So taking a little bit the control of defining what is sustainable, what is actually development oriented, what is green, taking it away from private actors and moving it into the hands of the state and having more regulation and more hard law defining the scope and the framework of operation. And here's where we started seeing something that was problematic and something that required more attention. So our question was, is it enough to have public standards to make sure that what is happening and what is called green is actually aligned with the needs of the planet in terms of the IPCC report of 1.5 degrees, but also with the complexity of environmental and ecological dynamics. And so these are a few examples that we've been analyzing and studying recently. The first one is the case of the European Green Bond Standards. So you may be familiar or not with the fact that the European Union has been one of the first public actors to issue a taxonomy and standards that define what can be called green at the moment of the issuance of the bond. However, given the political tensions behind that, the only compromise that could be approved and could be passed was that of making those standards non-mandatory. So we have the intervention of the state, we have intervention of a public authority, in this case a regional authority, that doesn't have the political power in order to bind anyone who wants to issue bonds to those specific standards and make them non-mandatory. And therefore, like the role of the public appears to be limited vis-a-vis what the expectations were of having a strong, uniform standard to be applicable to anyone issuing bonds in Europe. The second problem with the sort of intervention of the states, that the moment that we have a regulation and the moment we have a public framework, we crystallize whatever agreement and whatever underlying definition of green has been achieved. And what happened is that already that created some tensions at the level of the European Union, where several scientists and environmental groups left the expert group that was supporting the European Commission in the definition of the taxonomy and the standards by saying that what the European Commission was going to be approving as a final text and as a final taxonomy was not enough, or actually was contrary to the needs identified by the IPCC. And in particular, this had to do with the recognition of gas-based power plants and as green, but also with the use of the opening to bioforestry or bioenergy, which means the use of forest and the use of wood to produce energy. So we see that it's not enough to have the intervention of the public. At the end of the day, the intervention of the public still depends on the political framework and the political setting behind it. But I think that, and something similar could be also seen with China, where the government intervened through the Bank of China, and they passed a standard that recognized coal as green for the bonds market. So this is just a few elements that represents the tension behind the idea of public intervention in the definition of what is green. But what is, I think, more interesting from the perspective of development study and the perspective of the relationship between the North and the South is what the final sort of quote or the final title reveals, which is this idea of having an actor, in particular the European Union, that is using its legitimacy and it's using its market power to somehow becoming the standard setter of the world. So it's this idea that through standardizing and universalizing and having a participation of the local, of the governments and the regional authority, what happens is that there is an attempt to become or to issue the standards that everyone should be applying. And that's clear in the way in which the European Commission has defined its taxonomy by saying that anyone in the world who is issuing green bonds can refer to the standards and the taxonomy of the European Commission and then call the bonds as green, but also with the fact that there is an increasing amount of cooperation and collaboration between countries in the Global South and the European Commission, so that the countries in the Global South can adapt their regulatory framework and make it as close and as aligned as possible with that of the European Commission and the European Union in particular. And that, I think, poses several questions, and then we can enter more into detail with the Q&A of participation and democratic intervention, but also the recognition of the diversity and the complexity of the territories that are outside of the European Union, but also the recognition of the fact that there are very different levels of development of the financial market and very different moments in terms of the consolidation of the economic situation in different countries, and the imposition or the adoption of a universal standard may have significant repercussion in terms of who can use that standard, who can actually implement those standards, and who can be recognized as green and who cannot be recognized as green. And that falls all underneath the sort of label of the idea of creating a level playing field in an uneven world. So is it the application of the same green standard for bonds to everyone, to all the countries in the world, with the sort of diplomatic attempt of the European Commission to become the standard setter of the world? Is it creating a true level playing field where everyone has the same opportunities to use that standard and to characterize their bonds as green? Or there's going to be someone who has a competitive advantage, probably because it's in one economy there is a a stage of higher development, and other players who will not have the possibility of label their bonds as green, and therefore they will be excluded from this market. And that was one of the first criticalities that I think is important to analyze and understand, and also the sort of broader process of universalization that is happening. The second criticality that is pretty evident from the work that we've been realizing in Brazil is the fragmentation and separation that is happening between greenness and social. So the idea that we can focus only on the green, on the impact in terms of climate change adaptation and mitigation, without really caring or without really looking with the same attention to the social dynamics and the underlying complexity of the society in which that specific project or that specific investment will be realized. We saw it in the case of forestry and forest plantation in Brazil. There have been studies that have pointed at the way in which social dynamics within cities are seldom taken into consideration where climate change and mitigation investments are realized. So what we are noticing is that there is the risk that the sort of urgency behind addressing climate change and environmental degradation, this sort of push towards more and more investment, this desire of having trillions going into green finance and trillions going into green bonds, may come to the situation in which they will realize something that may be good for the planet, but they will not be adequately taken into consideration underlying social and environmental conflicts, but also the repercussions that they may have, both in terms of human rights and both in terms of socioeconomic inequality. And this is something that unfortunately is very visible in the policies that the countries are adopting. It's very visible in the way in which standards are set. And this is, we believe, like a crucial element if what we are aiming to is not only a planet where human beings and living beings can survive, but also a planet that is addressing the socioeconomic tensions and the socioeconomic inequalities that at the end of the day are also at the basis of the climate emergency. So we see that as a blind spot, and we see that as a sort of element that is taken for granted in the name of the urgency of addressing climate change. And I do invite all of you, if you have the chance in the future, to pay attention to the way in which the narrative is constructed and the way in which this idea of urgent need for resources and urgent need to scale up and urgent need to invest more money seldom comes with the realization that being too quick may also have negative repercussions on people. And so what is happening is that definitely NGOs and civil society organizations are pointing at that. And in the last days in Glasgow, there have been multiple calls for close and strong integration of human rights and human rights obligation in any attempt to green the planet and any form of policy that aims at the green transition. But at the moment, this is not really the case for most of the green bond standards. And the only standard that is making reference to the issue of human rights to the moment is the non-binding, so the voluntary standards of the European Commission that uses the phrase of "do not harm" as the term of reference. So in that case, what is most important is not that social economic inequalities or social economic conflicts and challenges are addressed, but that the investment, the project, whatever is considered to be green, do not harm, so doesn't do more bad than already there. So we do believe that this idea of do not harm, it really is not enough, and doesn't address what are the obligations in terms of human rights, but also doesn't really fit with the purposes of the Sustainable Development Goals, which at the end of the day have an holistic component and a systemic connotation, and contain at Sustainable Development Goals 11 this idea of not leaving anyone behind, which is way deeper and stronger than just the idea of do not harm. And so one of the issues that we are trying to push forward is this integration of socioeconomic consideration at the center of the green bonds expansion, at the center of policies that are financed with green bonds. And I will give you an example in a second about what the repercussions may be. And this is like the penultimate point that we raise with our research, in particular with the research that we are conducting in Brazil, which I think is, for me, it's very, very close to my own area of interest, which is the combination between global value chains and finance. And in this case, what we are looking at is a railway project, is a project in 2 states of Brazil, Mato Grosso and Pará, that should be leading to the realization of a large railway infrastructure to connect different parts of these 2 states with hubs where the content of the containers can then be loaded on boats and then shipped to Europe. And I think that this case in particular, this Ferrando case in particular, really raises several issues that development studies and critical development studies have been looking at for decades, which is the way in which territories in the global south are integrated in economic processes, and the way in which this integration in global value chains has repercussions, both in terms of material repercussion, the way in which they are changing the territories and the social dynamics where they intervene. So how is the railway going to be impacting the forest? How is it going to be impacting indigenous people that are living there? But also how this integration in global value chain is redefining or consolidating specific allocation of values and specific dynamics of power and economic concentration. So what we see here is a project that is going to be having material repercussion on the territory that is labeled as green, with the participation of the state and private actors. So we see that there is also sort of public-private partnership in the definition of the project as green. And the way in which this project is considered to be green is because by shifting the transport of commodities from trucks to railway, there is going to be a reduction of 77% of the carbon dioxide emissions that are currently produced by the system of road transportation. So what we witness here is the idea that we can take a complex ecosystem, a complex infrastructure that has to do with production, transportation, connections of the global north and the global south, fragmented into small pieces and small bits, and then just focus on one element, which is the emissions of carbon dioxide. And by reducing the emissions of carbon dioxide, we can call something as green. But it's not just a matter of calling something as green that matters for us. It's also who is going to be benefiting from the definition of that project as green, and who is going to be benefiting economically from the realization of that project. And what we see in the case of Ferrando is that the project is aimed at increasing the export of soybeans towards China and the European Union. So part of this economy, extractivist economy, that is taking raw material from the global south and leaving them and leading them and taking them into other emerging countries or the global north. But also what we see is a financial dynamics behind it, through which investors in the global north can put money into an infrastructural project that has complicated and complex social and environmental connotation, be reassured by the fact that it's being defined as green, and then make money out of the interest that will be repaid out of that. So what we think that Ferrando is telling us is that there is, on the one hand, this very narrow understanding of green, but also this reproduction of problematic economic and financial dynamics. And I see that I'm extremely long in my presentation, I'm sorry. So what I'll do, I'll just show you one picture of what green may be if the situation remains as it is. So this idea that we call green investments in monocultures that are radically transforming territories and that are not really taking into consideration the underlying social dynamics. And this is a plantation of eucalyptus in Brazil that has been associated with multiple conflicts between indigenous communities, the state, and private organizations and private companies that have privatized the territory. But if we only look at it from the perspective of greening, or only look at it from the perspective of greenwashing, we don't embed the analysis into the complexity of the local territory. If we don't look at the way in which the lending of finance into territory changes the dynamics, we will not be able really to understand the way in which this green finance is changing the territories. But that's just one part of the story. And then the second part of the story that I definitely have no time to address it here is the part on bonds. So what I think is important, and this is the last slide, is that we do not only look at the tensions between green and social, the green and the socioeconomic, and the green and the distribution of value, but we start investigating and really challenging the implications that that can have in reproducing historical dynamics of exploitation and historical dynamics of unequal distribution of resources. So what we're seeing is an increasing amount of green projects in the South that are going to be funded with money that is lent by actors, by global actors, but mostly by actors that are located in the global North. So capital in the global North, they will be lending money to actors in the global South to realize the green transition. And that has significant repercussions in terms of the distribution of value and the distribution of resources. Someone will have to put forest, water, land at work in order to generate the resources that are needed in order to repay the finance that they receive from the global North. And just to give you a sense of what that means in terms of figures, the 85% of the bonds that have been issued so far have been issued in dollars and euro. That means the countries in the global South that want to access these resources have to borrow euro and dollars and take the risk of currency to then implement them into territorial projects, local projects like the eucalyptus plantation that I saw you, that can then generate revenues in order to pay the North. And that really overshadows completely historical responsibilities and really put on aside everything that we've been discussing for decades about the need of reparation, restoration, and redistribution. It's just adding an extra layer of money that is borrowed, an extra level of indebtedness over countries and private actors that are already extremely indebted. Just to give you an example, Kenya and Ghana last year paid more in interest than they invested or that they put into the health system. And so we're just adding an extra layer of debt, potentially $5 trillion in 2025, without really asking ourselves what the implications are. And we believe that from a perspective of justice and climate justice in particular, that's extremely problematic. And then the second point is that of who is actually defining the agenda. And this is the work that I'm doing with Daniel Tisha. And we see that behind most of the initiatives, there are always the same actors, and the same actors that are mainly financial institutions that are creating the political space and providing the technical advices and the technical support so that policymakers implement a system where financial institutions can lend to players all over the world with very limited risk. So we think that it's important not to take this green finance and the use of green finance also in development context as a natural element that is inevitable, but really ask ourselves who's behind it and how is it that this policy has been increasingly globalizing and universalizing so that more and more countries all over the world want to enter into the market for green bonds, want to issue green bonds, want to be part of the green bonds kind of boom of the moment. And then the final point that I already mentioned briefly is the idea of really naturalizing the presence of debt without ever wondering and questioning what the implications of that have been in the past and will be in the future, both for people and for countries and for the planet. And I think that the most problematic point at the moment is that we're somehow in a conundrum, we're in a catch-22 situation where the only alternatives that we are presented is that of making access to debt easier to whoever wants to borrow for green projects or excluding them from accessing debt. And I think that here the problem is that the third alternative, which is accessing resources not on the basis of debt, but on the basis of grants or on the basis of official development aid, on the basis of other forms of finances that actually take into consideration the historical relationship between the North and the South, and accesses to finances that actually take into consideration the burden that extra debt is going to be putting on countries in the global South. That third alternative is not there and is not discussed. So from a critical development perspective or development studies perspective, I think that it's important to to be aware of the way in which debt under the label of green is now normalized and naturalized, and work hard in order to make sure that the third alternative is then going to become the normalized one, rather than just the sort of marginalized discussion that only very radical people have in the living room. And that's it, and thanks a lot.
Thanks a lot, Tomaso, for your very good introduction to Greenbone. So we'll now open the floor for questions. So if you have any question, you can write it in the chat, and perhaps I will start with a question myself to give people some time to think about this. So based on your presentation and also about the papers that you co-authored about this topic, I was wondering if you could say a bit more about the concept of social and ecological debt that you explain in your research, how this goes along as more green bonds are issued and as these projects pick up, the risk of a social and ecological debt also grows at the same time, which is something that is often unacknowledged by the enthusiasts or the mainstream, let's say, proponents of green bonds. So could you expand a little bit on this concept, and also tell us whether there is, for you as a researcher, maybe any way or any interest in quantifying or somehow estimating this social and ecological debt? Thank you.
Well, thanks a lot, Basile, and thanks also for reading the papers with such short notice. I think the idea of socio-ecological debt is a way of looking at territories in a historical way, and looking at the relationship between North and South in a complexified way, so that the present and the future cannot be de-linked or disconnected from what has been happening for the last 500 years. So in terms of debt, what we mean, and in terms of social ecological debt, what we mean is the way in which the presence of certain kind of investment, the presence of a certain vision of territories, and with forestry and with plantation is pretty evident. The way in which that way of treating nature, that way of transforming nature of the last 500 years through plantations, through deforestation, to connecting territories in the global south with the global north, because that's where all the commodities and the raw material will come in from, that has piled up historically throughout centuries a debt that is not the debt that the countries in the global south owe to the north, but it's actually the debt that the north owes to the global south, because of the way in which these territories and the social ecological relationship have been exploited, have been defined, have been shaped, and have been framed. And the moment that we issue more debt in the global south in order to address somehow the problems that have been created in 500 years of exploitation, and address an issue like climate change that has been just in a tiny fraction produced by the global south, that is mainly is a problem or generated by the global north, we're completely forgetting historical responsibility. We're completely forgetting this idea of debt, and we're actually twisting on its head, so that those who benefited throughout 500 years of contamination, 500 years of transformation of territories, 500 years of slavery, colonialism, and etc., can also benefit from the payment of interest that will be generated out of this money that will be lent to the countries in the global south. And I think that that's the reason why the discussions around green bonds and green debt cannot be disentangled and disconnected from all the campaigns for forgiveness of the debt, and all the campaigns to really reparation and restoration that have been out there and been out there for decades. But because of the climate emergency and because of the narrative that is now presented that we have no more time, that we really have to intervene, have been put on a side. And I think that is crucial, and is evident how also in the last 6 years from the Paris Agreement, where climate justice somehow made it on the preamble of the climate agreement and the Paris Agreement, to today, the amount of attention and the amount of space that climate justice is receiving by policymakers and by the people who are negotiating the agreements on climate has been decreasing. It was already almost invisible back then, and today is less and less. And the only people who are talking about climate justice are those who are outside of the negotiation. Well, I think that that's problematic, and it's not definitely more data that is going to be addressing that. In terms of quantification, I think it's a very tricky question, because how do you put a price tag on 500 years of social environmental exploitation? How do you put a price tag on slavery? How do you put a price tag on the way in which territories have been redefined and reshaped so that Europe could have industrial revolution and become an advanced economy? So I think that there are some notions like loss and damages and notion of equal but differentiated responsibilities that in the climate sphere are debated. But I think that what is important is not to give a number and to say it's 100 billion per year and that's going to be it. Just en passant today, Scotland committed to loss and damages to pay some money for climate justice, and they committed £1 million. So is £1 million a commitment to loss and damages? Is £1 million a commitment to climate justice? Definitely it's not, but it's 100 billion vis-a-vis what actually is needed. And so I think that it's not a matter of money, but it's really a matter of finding instruments that are different from just piling up resources and asking for more sacrifices, more austerity, more privatization of the territories and the market, just because that's what a limited amount of actors are telling policymakers to do. And that limited amount of actors is what we are trying to map. And I can assure you it's an extremely limited amount of actors with a number of people that probably you can count on the fingers of two hands that are omnipresent everywhere and that are kind of pushing for this agenda, which I think is very partial and very limited in its scope.
Thank you. Thank you for this response. And linked to this point is also the fact that you mentioned in your papers, and perhaps you can also expand a little bit on that, on how these green bonds and green finance in general reproduces other kind of inequalities beyond inequalities, for example, racial inequalities in the case of municipal bonds emitted in the US, if I'm not wrong. So to what extent do you think, first of all, proponents of green finance ignore this reality, and to what extent do you think in general green finance reproduces these pitfalls of economic development that we are already aware of?
Well, thanks for this question. So just I'll leave it a small premise. So we're talking about green finance, and what we have in mind is sort of large-scale financial institutions that are mobilizing billions or trillions. So we're talking about asset managers, we're talking about investors like BlackRock that have more assets than the GDP of Japan. We're talking about that kind of players, because these are the players that need certain kind of investments in order to mobilize. They can only move, they can only put money when the stake is high enough that justifies the cost of thinking about their investment, but also that generates sufficient return. So green finance is not only that. Green finance could also be a group of neighbors who is pulling together resources in order to pay for a specific local project that is improving quality of air, that is improving the generation of renewable energy. So there are multiple levels of green finance. But definitely when we talk about large-scale investors that only mobilize when we're talking about millions, if not billions, that are looking at high tickets for investments, what is happening is that inevitably, and that I think is the structural underlying inequality, those large amount of resources that have been accumulated through decades, hundreds of years of specific processes of accumulation, just do the same with the green transition. So they will remunerate themselves and they will grow by putting at work places and people elsewhere in the world, because at the end of the day, the moment that you lend money, you want your money back plus interest, so that money has to expand. And because money doesn't grow on trees, like it's very hard that can be done without really putting at work people and the environment. But also the more specific question that you were raising about this sort of underlying social and economic inequalities that are seldom taken into consideration is because there is this issue with projects that have to generate return that is clearly incompatible, we believe, with the needs and the rights of the most vulnerable. So the examples that Jenkins and others do with the municipal bonds in the US is a very telling example, the way in which water infrastructures financed with municipal bonds. Back then they were not called green, although today they could be called green because they have to do with water and sanitation, so they fall into the green categories. These investments were realized, and then at the end of the day, who paid for those investments were the most marginalized communities, whose fees for accessing the services increased, who were victims of gentrification and evacuation and expulsion, who didn't have access to water as a fundamental right. And we see that, for example, now in the case of Cape Town, which is a case that a PhD who's working with me, Hector Herrera, is looking at. Green bonds are used to raise money that is invested for pay-as-you-go water meters, so that you have to pay for water before you can access it. And we know, because there's been studied for several years, that that's a system that clearly goes against the interest and the rights of the most vulnerable, that clearly affects those without economic resources more than others, vis-a-vis the access to an essential resource like water. So there are all these dynamics that are based on the fact that investments in projects financed with this kind of tools need to be productive, need to be generating returns and revenues, because they have to repay the principal. And even if they were not productive in themselves, what they would ask would be public budget to be diverted from other uses and the provision of other services to pay for the interest of the investors. So there's always going to be a reduction of the amount of money that is staying in the public budget or is staying within the community. And this money is going to go on remunerating the investors that are, at the end of the day, financially benefiting from the green transition and the need for climate change adaptation and mitigation. And then the considerations can go on and on. Like I showed you the picture of an eucalyptus plantation. This is just historically territories, indigenous territories with a complex ecosystem, interaction between multiple forms of living and farming, cultures, visions and cosmologies, that in the name of the green transition is transformed into a plantation that is monocultural, where people have no access, where there is no possibility of hunting, where there is no ecological diversity, social diversity. So that transformation is clearly affecting indigenous communities way more than it is affecting anyone else. And it is happening there because these are the last frontiers that are available to implement this kind of projects. And normally those who live at the frontiers are already the most marginalized and most vulnerable. And the expansion in green projects and green finance is going there, is exactly tapping into these new frontiers and is exactly transforming those territories that have not yet been transformed.
Thank you very much for that. And perhaps we can finish with one question, looking at the global value chain, because you mentioned as well, of course, that all of this is nested within much bigger international value chain, where there's a lot of product transformation. There are many actors involved. There are many transportation networks involved and different countries involved. So of course, whatever happens at the ground of where, for example, a raw material is extracted, even if it is under a supposedly green project, of course, there is a whole different set of social and economic relations that take place beyond the simple extraction of a material, whether it is done in a green way or not. So what would be a way, a possible way to think, probably not in legal terms at this stage, but at least how do we conceive, how do we try to take the green aspects higher up in the value chain, along the value chain, and not simply at one node of the value chain? Or is there another way to think about this?
No, thanks a lot for the question. I think there are two elements there. So the first element is that when we think about value chains, we tend, or at least I tend, to always focus on the material aspect. So sort of logistic, the extraction, the visible productivity, and the visual element that have a territorial component and that are located in different jurisdictions and that are connected with the trains and trucks and that move things around. I think what green finance and the green bonds studies are revealing is that it's extremely important to also perceive the financial component and the financial nature of global value chains, because at the end of the day, global value chains are nothing but the latest representation of global capitalism, and we know that global capitalism is highly financialized. So on the one hand, the invitation is to take finance seriously and always ask ourselves, what is the financial component, or what is the financial framework in which these value chains are embedded? And that allows to do two things, I think. On the one hand, allows us to understand who benefits from certain processes, and normally those who benefit financially and economically are not located in the countries where the processes are taking place. And that creates different dynamics if we are interested in redressing socioeconomic problems, human rights violation, environmental degradation that is happening elsewhere. So as people in the global north, we can turn the gaze towards financial investors in the global north and have this conversation and this dialogue, but also this critical analysis of actors in the global north and the way in which they are actually reproducing or increasing their resources. On the other hand, this sort of complexity of the value chain that is wisely fragmented by proponents of green bonds in the case of Ferrando tells us that we cannot really green components of an extractive system because it's still going to be an extractive system. So it's about changing systemically and structurally the way in which products are like commodities are produced, agriculture is happening, the extractivist network on the sort of underlying economic texture of specific countries or specific territories and specific geographies. And I think that requires much more than just calling something green. And the point is that we cannot even be satisfied when an extractive process contaminates a little bit less because they're saving on carbon dioxide. So the case that I gave you is moving from trucks into railways in the case of soybeans production, but there is an increasing attempt to call as green the reduction in carbon dioxide that is generated by mining activities. So we have an extremely extractive system like mining that is then playing the card of greening because they are extracting, but at the same time issuing less greenhouse gases. And this really is a shift from a very mechanistic and simplistic approach to what greening is to a more structural understanding of the changes that are required in order to fall within or to respect the 1.5 degrees of that the IPCC is identifying, but also to keep together the environmental and the social component. And I think that there is no way in which you can keep the social and the environmental together if you have a value chain that starts with large-scale plantation of soybeans in the Mato Grosso and end up feeding pigs in Europe for the consumption of consumers in China, which is also what is happening. But that requires, unfortunately, that the analysis and the policies are not framed with a financial perspective, but are framed with a holistic perspective, which at the end of the day is a political perspective where lawyers, economists, sociologists, etc., all have to come together and make sure that the financing is the financing for a different way of thinking about the economy and not just a greener version of the same economy that we have.
Yes, thank you. Let's take one more quick question from one of the participants who would like to ask a question about the labeling. He explains that the same projects can be funded under the issuance of a sustainability bond, green bond, blue bond, ESG bond. For instance, EU green bond standards cover sustainable blue projects that we have witnessed under blue bond insurances. What do you think the implications of these different fancy labels and standards, if at all? So what's the implication about all of these different labels? Thank you.
Well, thanks a lot, Orange, for the question. I think that there is definitely a hype in the world of bonds, and now with thematic bonds, you see that every day there is a new attempt to rebrand a very old instrument, which at the end of the day is debt. So we have blue, green, sustainability link, the COVID bonds, the recovery bonds, the bonds that are connected with the Green Deal in the European Union. At the end of the day, they are all about one thing. They're all about debt, and they're all about borrowing and lending. So I think that what we really have to focus is the underlying legal relationship and the way in which that bond and that debt is framed into broader historical but also present relationships. And then once we realize that the specific relationship that they're creating because of the way in which credit and debt are defined is not problematic from a socioeconomic perspective, is not problematic in terms of reparation and restoration, is actually embedded in a broader process of redefinition of responsibility. Once all of that is taken into account, then we can look at the label and see whether or not actually it's voted that characterization. But I think that all in all, it's just a way of creating more opportunities for investment And at the end of the day, this is what has been happening for a few years. So it's not a case that a lot more money is flowing towards bonds after the pandemic crisis, because bonds are way less risky than investing in equity. So the moment that you're a financial investor, you see that there is a problem with investing in companies that may go bust, or they may not be generating the same returns that we're expecting, bonds are a safe haven. So you put the money in bonds because you know that it's less likely that they're going to be defaulting, it's less likely that they are not going to be paying. So if actually what we're seeing is the need for financial investors to invest into bonds, we should switch the perspective and say, okay, so if you need to invest into this kind of instrument, we're going to be creating the instruments that we need and not the instruments that you need. And unfortunately, this is not happening. At the moment, there is an attempt to create the instruments and label them in the way that is actually pleasing and appealing to investors, rather than deciding and defining what are the priorities and what is required and what is needed by people, and in particular by the most vulnerable, and then getting the money for that. I think that as long as we don't change this dynamic of power, and as long as it's going to be finance deciding where the money is going, it's very hard that we overcome any of the problems that we've been discussing in the last hour.
Okay, thank you very much, everyone, for this Q&A session, for taking part in this. And thank you, Tomaso, for presenting again with us on green bonds. We hope you have enjoyed the talk, and please feel free to check our website at eadi.org if you would like to register for upcoming virtual dialogues. Thanks, everyone, and see you soon.